Asian stocks fell sharply on Monday, led by significant drops in Japan, where trading was briefly halted due to circuit breakers designed to manage extreme market fluctuations. This global sell-off intensified investor fears about a slowing U.S. economy, causing widespread declines across Asia. In Japan, the Topix index, which encompasses a wide range of the country's economy, plummeted by 12.2%, marking its largest single-day loss in over 30 years. The Nikkei 225 index, a key benchmark, also dropped by 12.4%. Both indexes' declines triggered trading halts to stabilize the market. South Korea's Kospi index fell by more than 10%, prompting a trading suspension there as well. Other markets in Taiwan, Singapore, Australia, and Hong Kong also experienced losses. The negative trend was anticipated to continue in European and U.S. markets. S&P 500 futures were down over 3%, while Nasdaq futures fell 6%. European indexes, including Germany's, were expected to drop more than 2%. Bitcoin, a major cryptocurrency, also saw a nearly 14% decrease, reflecting broader investor anxiety. This turmoil followed a U.S. jobs report on Friday that showed a significant slowdown in hiring in July and an increase in unemployment to its highest level in nearly 3 years. These indicators heightened fears of a slowing economy and concerns that the Federal Reserve might have delayed necessary interest rate cuts. Nomura, a Japanese investment bank, noted that the weak U.S. data has sparked growth scare in the markets, reigniting fears of a quicker than anticipated U.S. economic slowdown. In response, Goldman Sachs revised its forecast, now expecting the Federal Reserve to cut interest rates at its next 3 meetings, an accelerated timeline compared to previous predictions. In Japan, the weak U.S. data added to investor unease. The Topix index has fallen over 20% since last Wednesday, when the Bank of Japan raised interest rates for the second time in nearly 2 decades. This rate hike also led to trading suspensions in long-term Japanese government bonds and the Nikkei 225. Japanese stocks had enjoyed strong performance over the past year, driven by a weak yen, which boosted earnings for Japanese exporters. However, the yen has appreciated significantly over the past week, compounding the issue. Foreign investors have begun to offload Japanese stocks, selling nearly $4 billion more than they purchased during the week ending July 26. The previous week also saw a net sale of $1.5 billion in Japanese equities.